Hello, and welcome to Donatien Investment. This analysis is for Whitecap Resources on the Toronto Stock Exchange as of 16th of August 2026 with a share price of 17 Canadian dollars 7. The full report is on donatien.ca. Forward PE 14.0x against a warranted 15.0x, net debt at 0.5x funds flow. But the amplifier came off, so this is buy, not strong buy. Whitecap has done nothing but beat since the last report. The second quarter delivered record funds flow of 1,354.6 million Canadian dollars and record free funds flow of 924.5 million. Production guidance was raised for the second time this year. Net debt fell 877 million to 2,516.8 million. Taking leverage to 0.5 times annualized funds flow. And the short signal still came down from strong buy to buy. The reason is the amplification test. The previous report read economic pressure as a tailwind off the sector map. This run uses Whitecap's own line in the 12th of August macro report, which reads outperform, neutral, neutral. Pressure is anchored on the medium horizon, that horizon is neutral, and amplification requires a tailwind, so the base buy stands on all three horizons, and nothing is lifted. This is the decisive new fact in the report. The second quarter was struck at an average West Texas crude price of $92.70. The third quarter has so far averaged $79.43, 14% lower, so the records are not the run rate, and the next print will be down sequentially. The level is still excellent. $82.40 crude against a break-even of roughly $55, which is 67% of spot, but the forward leg is weak. Crude sits above both its 50 and 200-day averages, yet the 50-day has rolled over, and 4-week momentum is flat after a 20% 6-week spike. Natural gas is worse, $2.71, below both averages, with all three momentum windows negative. Gas is 39% of the volume, but only 7% of the revenue, so it caps the short driver rather than dominating it. On the numbers, forward price to earnings of 14 times against a warranted 15, a ratio of 0.93, which sits in the attractive band. Enterprise value to EBITDAX is 5.5 times against an 8 times line. Reserves are 2.2 billion barrels of oil equivalent with a reserve life over 16 years, and only 21% of unconventional locations are booked into that. The replacement ratio worth quoting is the proved developed producing figure of 383%, because that one is organic. The 1100% 2P figure is largely the Veren acquisition, and we do not credit it. Free cash flow is a 6.4% yield on enterprise value, funding a 4.27% monthly dividend at about 39% of free cash flow, a falling debt balance and buybacks planned from 2027. The single largest risk here is not a business risk. The Strait of Hormuz has been effectively closed since the 30th of July, and a negotiated reopening would remove a large part of the price Whitecap is realizing. Iran has tied it to sanctions relief and reparations. If it lands, the premium unwinds in days rather than quarters, and crude returns to $60 to $65. That is the bear case at $13, 23.8% down, and it would gap the stock rather than drift it, so a stop would not save you from most of it. Second, a competitive one. Whitecap's crude and condensate realization of $127.82 depends on Alberta being short diluent, and ARC Resources, Tourmaline, Ovintiv, and Strathcona are all growing condensate volumes into the same pool. Third, the crowding. 100% of covering analysts are bullish, and not one target sits below the current price. That is not comfort. Now weigh the risk against the reward. The bull case is roughly 44% above today, the base case the most likely, about 14%, and the bear case a fall of about 24%, so you are risking about 24 to make 44. So, our call on Whitecap Resources on the Toronto Stock Exchange, buy on all three horizons. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donachien Investment at donachien.ca. The link to the full report is in the notes below. Have a great day.